Good evening and a warm welcome to you for this webinar. Myself, Charlie Burton, in conjunction with Tickmill on turning a small trading account into a large one. It seems to be a popular subject. I've done trading challenges over the years to do just that. And so I'll be talking a little bit about one of the challenges I did, which was a small account, relatively small, and turning that into a six-figure account. But more importantly, I'll talk through the various aspects, the things that I did in order to achieve that, so that most of you can take that away. And as always, when I do a webinar, there are going to be things which you'll take on board and hopefully apply to your own trading, and other things that you'll just discard. And that is trading. It's a very personal journey. And so as far as I'm concerned, I'm just going to show you what I do here this evening. And I'm going to show you some of the tips and tricks that I've used in order to do these things. You're not going to want to use all of those tips and tricks. That's what makes the market. The market is so diverse. You've got traders using all sorts of tools. There is no right or wrong in that regard. There are certainly some truths in trading, and I will go through all of those with you about what makes successful traders. Okay, so let's get into the first slide. And of course, we have to use the risk disclaimer. The material provided is for information purposes only and should not be considered as investment advice. The views, information, or opinions expressed in the text belong solely to the author, that's me, and not to the organization, committee, or other group or individual or company. CFDs are complex instruments and come with high levels, high risk and of losing money rapidly due to leverage, etc., etc. There we go. So let's move into the overview. So what we're going to be covering here this evening is the three elements for turning a small account into a large one. These are some of the core elements that I believe that every trader needs in order to do that. We're going to cover off the plan, the strategies and tricks. And I say tricks, but there's strategies involved, and the strategies that I use, but also some of the tricks as well that I use within that as well. I'm going to show you some examples of traders who have done just this. And also, I'm going to give you the option, if you want to follow my trades. So, for some of you. Now, talking of which, many of you probably don't know who I am. I'll just take 60 seconds to explain. I've been trading 27 years, started in the late 1990s. I've appeared on the BBC on a couple of different occasions. One was in a trading documentary called Traders Millions by the Minute that I featured on. I've also been on another BBC show here in the UK. I've been on BBC Radio. I've been in the Financial Times interviewed, the Daily Telegraph interviews, and of course trading magazines and all that sort of stuff. I've won 5 trading head-to-head competitions at trading shows, undefeated at the London Forex show, among many other things. So I've been doing this a long time. I do have a trading community where I am with traders 5 days a week within my community. And I also professionally manage money. I'm authorized money manager here in the UK. You can check me out at the FCA. I'm on the register. So that always sounds bad when you say that. So let's get started. Right, the 10K to 100K, this challenge that I did, so this was the first, the challenge turning a relatively small account. This was $10,000 US, so at the time around about £8,000, and trying to turn that $10,000 into 100,000. Why? Why did I even bother? Well, I'll tell you the story behind it. I was actually doing a webinar for a company in America at the time, or I was going to be doing one. And of course, people say, "Oh, could you do a webinar for our traders?" And you're always thinking, well, what could I do? What could I present on? And I thought, do you know what? I liked back, to say back then, this was actually 10 years ago now. And I thought I could do some live trading, but it's only live trading over an hour or so while you're doing a webinar. I know. Why don't I do a trading challenge where I'm going to be trading, and I'll do a webinar, and then I'll do regular updates with that group of traders over a sustained period of time. So what I decided to do was to see if I could do 10K into 100K in 2 years. So there's no element of luck in it. Sometimes people can make a lot of money in the space of 3 months, and then they give it all back, sort of thing. So let's see about doing it over a sustained period of time. So I said to the group of traders, well, let's see if I can do it over 2 years. All right. So it's a 900% return over 2 years. And so that was how that came into being, if you will. Now, as it turns out, it took me 2 years and 8 months. So I didn't achieve it in the 2 years. And the irony is, I think the 10K at the 2 year mark, or just before the 2 year mark, that 10K had got up to about 60K, I think it was. So the equity had been going up and got up to 60K. And then I put my foot down, thinking, right, let's just get this thing done. Because it is a pressure. When you're doing these things, it is a pressure to deliver. You've got people having high expectations of what you're going to do. And so I'd got to close to the 2 year mark and thinking, let's just get this done. I was really close. Or maybe it was more. Maybe it was 80K. Yeah, it was about £60,000 at that time. Yeah, so maybe $80,000. And of course, I put my foot down. What happened? I went into a drawdown. So then it took me another 8 months to trade out the drawdown and then finally get to that target. So that was a little bit about what I did, why I did that. I constantly now do trading challenges because I find doing trading challenges is good to show people what can be achieved. Now, one thing I always say is, these sorts of things are speculative. You're not going to turn 10K into 100K risking 0.01 of 1% per trade. It is higher risk, but it doesn't have to be super high risk. So I'll talk about risk in just a moment. Now, without these 3 things, we're going to move into the 3 essential elements now. I've done enough on what I've done. I'm going to talk about the techniques I used and all of that in just a moment. So without these 3 elements, you can chuck the strategies in the bin. So first and foremost, I know it's very basic, but you need to have a trading plan. So I set out a trade plan with the goal to try and turn 10K into 100. So how did I go about doing it? That's a huge goal, to turn a small account like that into a larger account. Well, break it down. So the first thing that I did in the trading plan was to break it down. Okay, what do I need to do with that 10K in order to start propelling it up? So when I first started trading on this, I was purely day trading for the first about 3 months. After that, I introduced swing trading into it as well. So what I needed to do was to figure out, okay, if I could average on this $50 a day, $50 per day, or could I average $50 per day on this account? Okay, so that's 0.5% per day, right? So 0.5% per day. And so by breaking it down like that, thinking, yeah, I think I can do that. Okay, but trading the markets is not a job, as you all know. Returns are sporadic. They come in all sorts of shapes and sizes. You don't make consistent profits is what I'm trying to say. You don't make the same amounts of money every day. So in order to average $50 a day, what I needed to be doing is on the winning days, I needed to be making $200 to potentially $300 on the winning days, because I knew that I was going to have plenty of losing days as well. You don't make money every day. So if I could be making somewhere like that sort of amount, and some days it might be a bit more than that, but on average, can I make $200-300 on a winning day? Because I know that I'm going to have those losing days as well. So then it'll average itself out towards $50 a day. Okay, right, we're getting somewhere. So this is the plan. This is what I'm talking about. You have a trade plan. Well, okay, I've got a goal. How do I go about doing it? Yes, within the trading plan were the strategies that I was going to be using as well. I'm going to be talking about those in just a few minutes. But we have to break it all down. So, okay, in order to average a given amount, you've got to make more than that on your winning days because you're going to have losing days. All right. So how much risk am I going to be taking per trade? So in order to achieve 0.5% on average per day, that means that I'm going to have winning days, plenty of losing days, but it'll average itself out. How much do I need to risk? Well, for this challenge, I allowed myself up to 2% risk per trade. And I say up to because I didn't necessarily take 2% risk on every trade. Depended on the trade setup, how the trade was looking, whether I wanted to have a smaller risk on that particular trade or a full risk. Full risk was 2%. Okay. So a lot of the trades I was risking, 1% per trade. And if it was a winning trade and I got a 1 to 2 risk to reward on it, then I would obviously be banking $200. And if I get a couple of trades come through, they're not all, from an intraday perspective, all going to be 1 to 2. Some are going to be less than that, 1 to 1.5, that sort of amount. But certainly as I started to put the plan together, right, okay, in order to achieve $50 a day, which is over the course of a month, I'm going to have to get rid of that now. So over a course of a month, $50 a day, there's about 22 days on average in a trading month. So that's what, $1,100 in month one. Okay. So, but then we start compounding it. So I'm thinking, right, okay, I think we can do that. That's 11%, so to speak, in month one. Okay. If I can average that. And then what I'll do is I'll then compound it because now that account's grown, and then I'll be looking to make $60 a day, and then 70 and 80 and 100. As it turns out, the first 3 months I averaged about 50% per month in the first 3 months. So I got lucky. So I very quickly turned that $10,000 into over, it was about 50, maybe not every month, but maybe a 40 or whatever. But it was within 3 months, it was up into the 20,000s, okay, above $20,000, $25,000. So I got a bit lucky. Everyone gets a bit lucky here and there, but I certainly didn't do that after that. So everyone has a little winning streak here and there, but that was the plan. The important thing is the plan. And then from there, I could then grow. I could then grow the plan. I've got the capacity to be able to make that given amount. I could increase it if I wanted to risk more and all of that. So trade plan first and foremost. Right, I can now got the goal at the top. Then how am I going to achieve the goal? Right, okay, let's do the numbers. Right, as for day trading, I can do that. Right, then I'll introduce swing trading. What techniques, what strategies am I going to use? Right, write those down. Okay, mostly Forex. I think I was trading the S&P as well. So I always trade the S&P a bit. Now, risk I've already covered off. That was up to 2% max risk. So I would trade within that. So a lot of trades would be at 1%, But, there'd be a fair few that would be, at max risk as well at 2%. So if I was risking 2 and then I get 1 to 2 risk reward, then obviously I'll make a bit more as well. But, so I'm a trader who does vary my risk. Okay, so I'll trade within a risk parameter up to 2%, which means that some trades I might be risking 1%, another one I might be risking 1.5%, another one maybe 2%. Some people don't like that, and that's fine. Like I said at the beginning, each to their own when it comes to a lot of the things, like I said, that I'm going to go through tonight. Not everybody is it going to suit. Some people like fixed risk on every trade. That's fine. So I'm just showing you what I did. This is all part of that trade plan. Different people are going to get there differently. Then, of course, we've got mindset. Mindset, probably the most important thing of everything. I spend my life talking about mindset. If I could be all I talked about in trading was trader mindset, which is a lot, I would be happy. Because I think most people still, even though they understand mindset, I still think the large majority of traders hugely underestimate just how important this is. So in order to turn a 10K into 100K, you've got to have a strong mindset. So whatever your goal is, and I'm going to share some other examples tonight as well of some other traders doing similar things. But so for example, let me give you an example of mindset. So that equity, like I said, I got like close to 2 years, and I just thought, I'm really close. I'll put my foot down. I'll put a few extra trades on, or whatever it was at the time, at max risk. So still at the max risk, but I just wanted to put my foot down, so I was eager to get the trade, the challenge done. And then what happened was it was about £60,000 at that time, and it dropped back down into the 30,000s. So I had a 50% drawdown. So when it comes to speculative trading like this, the bigger the gains you're going for, the bigger the potential drawdowns you're going to get. It's as simple as that. The bigger, in all walks of trading, if you're trying to make 10% in a year, then, you should, expect to have maybe a 5% drawdown. If you're looking to make 20% in a year, you've got to expect a potential 10% drawdown, and so on and so forth. So the bigger the potential returns, then the bigger the potential drawdowns. So anyway, so I went through from 60,000 back down to 30. You've got to have a strong mindset to be able to deal with that and then trade out of it, back up, and then getting to the 100K. So, and there's a lot that goes on with mindset. When you have your losing trades, when you go through a losing period there, not allowing it to affect you, and then getting maybe too cautious or too fearful, all those sorts of things. So mindset is huge. It's a whole body of work. I could never do it mindset justice in the space of one webinar. I think I have done a previous mindset webinar with Tickmill, and we'll have a look at the recordings in just a moment. So certainly that is a huge thing with regards to doing any sort of trading, whether it's this or just normal trading. Mindset, overcoming greed and fear, reducing your emotional range is so important. And this is the reason why most people quit. It's because they never invest their time and energy in their mindset. Okay, so what we're going to now do is we're going to get over to the strategy element. The first thing that I'm going to say is strategies are not the holy grail. This is the bane of my life. Like I said, I've been trading personally now for 27 years. I've been training traders on and off now for the past, we're in 2024, so about 22 years. And yes, you have to have strategies, but they are the holy grail. If you can have a great strategy, but if your mindset's not there, you'll always underperform the strategy. So the real holy grail is your mindset. You know, you can have an okay strategy and you'll still end up failing with it because of your own psychology. Having said that, we do have to have strategies and entry techniques and all of that. And I have them, of course. I use a range of entry techniques, and I'm going to go through those with you now. Yeah, I can see questions coming through, but I can't answer all that. Yusuf, I've just seen your question there. Brett, I'll come back to yours because yours is specific to what I said about risk. You said, what determines your risk per trade? As in, if you decide trade 1 will be 2%, trade 2 will only be 1. Yeah, I'll have like a checklist, Brett, and there might be 2 trades which they both score. One scores, let's say, 9 out of 10 on a checklist, and the other one scores 7 out of 10. They're both worthwhile taking, but I'll downgrade the 7 out of 10 a little bit by risking down. It's not leverage. No, don't get confused with leverage. Leverage is how much leverage a broker is giving you. This is 1% at risk of your account. So if you've got $10,000 in an account, I'm risking $100. That's it. And you just use a calculator. So if I'm going to take a trade which has for argument's sake, a 100 pip stop loss, and I've got $10,000 in a trading account, doesn't matter if it's $2,000, whatever, but that's what this challenge was. $10,000 in a trading account and 100 pip stop loss. Then I just use an online trading calculator to pop that in and say, and I only want to risk 1.5% of my account on this trade. Okay, there you go. You pop that into a trading calculator, and it'll tell you how many lots is correct. So what the lot size is going to be, so that you're only risking 1.5% in that example. So you just use a calculator. It's as simple as that. Right. Okay. Yes, Andreas, it is being recorded. So what do I use? And this is something that I've used for many, many years. Multiple time frame divergences. Now, I'm going to go over just briefly here to... There we go. Where is it? Okay. So I'm just going to go over to... This is Tickmill very kindly put together a little Charlie Burton hub. And on this hub, this is someone asked earlier, was it? I can't remember who asked. There's a load of information on here. If you open a Tickmill account through this hub, yes, Tickmill will fund you in order to join my community. So I've got a community of traders. I'm there every day. And basically, if you open a Tickmill account, they will fund, they will pay your subscription for you, basically. Now, what is there else to say? I'll put this link up because it's such a long link. Actually, it's a bit of a shame it's a long link. So I'll just type it into the chat channel there, so you've got the link. If you're watching this as a recording right now, and you're like, "Well, I'm watching this in 2 weeks' time, Charlie. How do I access it?" Well, let me just. I'm just going to bring it up. So there it is. So if anyone has any issues trying to open an account, please email Giuseppe. I'm putting Giuseppe's, there we go. I've just popped Giuseppe's email address. He's always said, look, if anyone has any issues opening accounts or any questions on this, just email me. So if you think, oh no, I'm out of jurisdiction or whatever, just email Giuseppe. Giuseppe's, for those of you who are watching this as a after the fact, and you're obviously not going to be seeing the chat box, Giuseppe, P-E. Giuseppe@tickmill.com. That's it. Giuseppe@tickmill.com. If you just email him, he'll answer all your questions. Okay. Right, now what I was going to do is just scroll down here. There's a load of information on here, but if you scroll down, look, there you've got my previous webinars. Great. And there it is. This webinar here. So if you scroll down, there's a little arrow here, or it'll default over to here. You see this little arrow on the right-hand side. So it's got a number of the webinars I've done this year. If you click on that arrow, then it'll take you through to this, Mastering Multiple Divergences. This was a big monster webinar. If any of you were here for that, it was a big one. So I'm not going to go into detail on divergences here tonight, because I've given everybody here the link to this page. If anybody's watching the webinar and you're thinking, how am I going to type all that URL out? Just email Giuseppe and he'll give you my hub, Charlie Burton hub, and he'll give you the link. So that Mastering Multiple Divergences, do check that one out, because I can't spend 3 hours going through that again here tonight. So what I am going to do though is, let's get the presentation back. So I am going to go through some elements. I'm going to go through multiple time frame support and resistance. This is what I use. And like I said, trading doesn't need to be rocket science. There's not some magic thing that I used in order to turn these small accounts into large accounts. And it's the same with the traders that I'm going to share with you in a bit. There is no holy grail. There is no magic formula. People will try and spin that to you, but there isn't. So I use relatively basic stuff. Don't get me wrong, it all comes together, and there's a lot of moving parts within that, but it's not some sort of secret strategy per se. All right. Okay. So support, resistance, some divergences using multiple time frames. There's more to it than that, of course, but these are some of the things that I was using. And risk and reward. Okay, when it came to the swing trading, risk and reward is key, and I'll be talking again a bit more about that as we go forwards. Okay, so let's come over now and actually give you some examples. So I'm going to go back to the charts now. So we're going to start off with, I believe, the Aussie dollar here. So, but not where we're at right now. Actually, no, we're not. We're going to go to the euro first of all. Yes. Let's put this into replay mode. That'll do. Okay. Don't worry too much. I've just got some moving averages on my charts here, so I'll just talk you through what I've got on my charts. I've got some moving averages, just standard. The gold ones are 200. The black ones are 100. Sorry, a 50. The green ones are 100, and the blue one here is a 20. Doesn't matter if you use moving averages. I don't mind what you use. Again, I'm not here to tell you what to use and what not. I'm just showing you here what I use and what I've used and what I still use as a professional money manager to this day. Down the bottom is a standard MACD. It's just an MACD indicator with the standard settings. 12, 26, and 9 is your out-of-the-box settings. That is what I use. Okay, so I'm not going to spend loads of time on divergences, but I hope that what you can see is a divergence is when an indicator is moving in the sort of opposite direction of what price is doing. It's diverging against price. Andy, Athembil, I've already shared the screen up above with the... Can you not see the screen? You can see the screen, can't you? Now I better double check. Can you see my charts? You can. Right, phew. That's all right. Good. Okay. So we've got a low here and we've got a low here. 0.1, 0.2. Okay. Now we've got an MACD, the MACD line, which is the blue line. So again, down with point 1, we can see the blue line made a low here, made a trough. At point 2, when price made a new low over at point 2, the MACD line was in the process of making a higher low. Okay, it's as simple as that. Obviously, there's a lot of detail in that. I've just said it's simple. There's a lot of detail in it. But that's where I'm afraid you're going to have to, in your own time, I say I'm afraid, it's a brilliant webinar. Please watch that webinar there. This one here, just click on the link and you can watch that, all about divergences and how I use them. Okay. A thimble, you're going to need to, I would log out and log back in because it's only you. So if you're seeing strategies are not a holy grail, it's got stuck at your end. So if you just log out and then log back in, it should work for you. There you go. Cool. Okay. So that's it. That's just a divergence. Okay. I'm not going to go into all the detail, like I've said. Right. Let's get rid of replay mode here. Because I'm now going to go through the sorts of things that I would look for. So I'm going to first of all go to an example, because this is all through that time when I was trading that stuff. Aussie dollar in 2016. So 2016, the Aussie dollar had come down. Let me just zoom out a little bit. So hopefully you can all see. Hopefully you can all. Amit, just scroll up. And I've put a link into the box. I'm laughing because I'll do it again. Oh no, that's not it. Scroll up within this chat box. Oh, maybe it's not showing it for you again. Oh, hold on. I'll share it again. Hold on. This is it. There's the link. Copy. There you go. Right. Save that link. Okay. So back to the chart. It's simple stuff. You know, buying support, selling resistance is the basics of trading. Oh, you can pin the message, can you? Oh, maybe I can. Well, I don't know. It doesn't. Anyway, me to everyone. I don't know. Okay. Trend line going way back, which started off the lows in 2001 and 2002. Just a straight trend line analysis. The irony was that the Aussie had really fallen off a cliff in 2014. Basically, the dollar was having a great run. All right. The dollar was having a great run against a lot of the currencies during 2014. But then it came slam dunking it down into this trend line here that I had on my chart. So what I tend to do, and this is just one example, don't pigeonhole what I do. I'm going to show you a number of examples of what I do. But it's support, and it's long-term historical horizontal support as well. So I had this overlap here. Now that's on the monthly chart. So where did I trade it from? So we've come down to a load of support. Then I look for divergences like I've just shown you. So if I now go to the weekly chart, and I'm just going to go to 2016. Let's change that to 2016. There we go. Right down here, this is that same level with the trend line and the horizontal level. And so I was busy trading the Aussie dollar once it bounced up here. So we've got the two lows. We've got, a multiple divergence here. Again, all that detail of divergences is on my homepage there. And then I was trading off the back of that Aussie. Now, the thing is, a lot of the time, I'm trading off the smaller time frames, then running the trade on the higher time frame. So I might be getting in off a smaller time frame. There might have been also, I don't know if there was actually a divergence on the daily chart, but I'll be looking to find entries. Once I can see we're getting divergences coming in, I'll be looking for smaller time frame divergences as well. And because the smaller they are, the time frames, then the smaller my stop loss, which means the bigger, and then I can then run the trade based on this weekly time frame, and that's where I can get big multiples of risk to reward. Plus, I add in as I'm going along. So I'll add in at some certain point. So I haven't just got the initial entry, I've also got a subsequent entry as well. So that's how I do it. That's how you end up compounding your gains. Some of you, I'm sure, already do that, but that's what I do. Okay. So that's just one example. Let's move on. So let's take this back. So now, this is a nice example. Dollar CAD. This is all during that, what was going on at that point. During that time, during that challenge. These are just some of the trades that I was taking. So another one here was on dollar CAD. The dollar CAD was in a lovely upwards trend. In fact, what I'm going to do is, again, put this into replay mode so you can sort of see. Right, okay. So you can see that it was in a lovely upwards trend and it just done a pullback on this time frame. This is a monthly time frame. I don't care. We've pulled back on the monthly. So what am I going to do? And it's pull back into this prior price action going way back as well. I'm going to now drill down to the smaller time frames and look for divergences on the smaller time frames. So there were divergences on certainly on the weekly charts, and I think the daily charts at that time. So, and the funny thing was that I had traders saying to me at the time, "Oh, Charlie, looks like you're going counter trend," because they're looking at a daily chart. This has just pulled back for 3 months. So on the daily chart, in fact, I'll take you to it. Where are we? April 2016. So let's do that. 2016. Okay, go. Oh, I need to take it to a daily chart, don't I? That'd be useful. Right, now go to 2016. I'll just scroll it back a little bit. There it is. This pullback here is that 3-month pullback you just saw within a massive upwards trend on the monthly chart. So, but of course this looks like a downtrend, and it is a downtrend on the daily charts. I don't care about that. I'm going to be trading the divergences down here to get myself long. So again, I can trade that off the smaller time frames. In fact, I think it was a 4-hour divergence I actually got the first position of, to trade that then on the long side. So again, it was a great example there to capture a load of points on dollar CAD. It was the same thing that happened actually for dollar CAD, just in relative terms a short while later. Oh, I need to get rid of that now. So just a year later or so, price came back down into this whole support zone again. It's now on the 50 period moving average, which is facing up. All good stuff. And applied the same principles. We had divergences again down there. Same thing again. So higher time frame analysis, looking for price to pull back into support. Then drill down to the smaller time frame, looking for a divergence to execute. Right, I'm going to give you another example. Same stuff again now. So here's another example. Euro dollar 2018. So first things first. So 2018 is about where my cursor is. So it's just this is on a monthly chart. So the euro had already had a good run through 2017. It started breaking up. So when I'm looking for price, if it's breaking up, I'm looking for the next level for it to run to, which was a 200 and the 100 moving average. And that all came in with all of these prior lows as well. So I was looking to run a trade into that next resistance zone. Okay. But what was going on the smaller time frames? So let's go down. Daily chart now. 2000 and what did I say? 18. So let's just do the go to, change that to 2018. And then it was back in the January. There we go. I'll do. Here we go. So what had actually happened on the daily chart was price had broken up here and had just done this lovely little 3-bar pullback. That's all it was. I've just shown you what that monthly chart was, and that's all that monthly resistance I was looking to run a trade up to. It's the same thing time and time again. So we get a pullback into support. We've got a bit of moving average support and prior highs. All basic stuff. What was going on there? On the hourly time frame, guess what? Oh, smaller time frame, because this is now the daily chart. So I'm now going to go down to an hourly chart or a 2-hour chart or a 4-hour chart. But what was going on is we had divergences on the hourly chart. So I'm getting it on a trade like this with literally like a 30 pip stop loss and having a run like that. So again, by combining time frames, so you're looking for support and resistance on high time frames in your overall analysis, then drilling down to the lower time frames to get an entry which might have, by comparison, a relatively smaller stop relative to the run that you're looking to have. And that's where you can get these exponential returns from trades. This is how I did it. This is still the principles that I use in my normal trading. So trying to get ultra high risk to reward ratio trades. And the way to do it is combining time frames. So I'm just giving you a few examples here so you get the idea. So I've shown you a divergence. Go, by all means, watch the please do watch the, as I keep saying, that webinar. I say old webinar, it's just from a few months ago. Do watch that webinar on mastering multiple divergences, because there's a lot more in there, and I've got other techniques using multiple divergences in there. But I'm just showing you the sorts of things that I was doing. Oh, right. Pullbacks into support, pullbacks into trend lines, pullbacks into prior highs, coupling up with divergences, done, So, and then you get big risk rewards, adding into them as well as it starts moving in my favor, not on every trade, but on some of them. And then that gives, again, it allows for those exponential returns. Yep, Thirandu, you're going to need to watch. You're going to need to watch the previous webinar. So to go into the detail, because tonight's webinar is about conceptually, how do you go about turning a 10K or small account into a large one? Like I've already started off, going through the trade plan, deciding what's your max risk, the things that the tools you're going to need, like mindset and all of that. So I'm going through all of that. So that's what we're focusing on here tonight. The absolute detail, you're going to need to take some time, watch that webinar. It'll just help you. Okay. In all of that. So these are the strategies I'm using, the tips and tricks. Now, some of these trades were, most of these trades are swing trades, because I can't go back years on a 5-minute chart to show you an example. Okay, the data won't allow for it. So I'm showing you just a few swing trades that I was doing. I've been, through that whole period and beyond, of course, as well, just to give you the ideas of the sorts of techniques that I was using. But you can apply these same techniques to intraday. So it's exactly the same principles. So if I'm showing a monthly chart, for example, what's this back on the monthly of euro dollar now? So where were we? 2018. So if I'm showing this is a monthly chart, and I'm looking for price to run up here into these prior lows and that key moving average, a big moving average there, and what's gone on the smaller time frames. Just imagine this is a 4-hour chart. So let's just say this is a 4-hour chart now. And when we went down to that daily chart, that would be your equivalent of a 5-minute. It's the same principle. So you don't have to do it all on swing trading like these trades, some of these trades were. It's the same principles. The markets are fractal anyway. So you're trading top-down analysis. So if you're trading off a 4-hour chart or a daily, and you're looking at the daily for support and resistance, or 4-hour chart, and then you go down to the 5-minute chart or the 15-minute chart to look for your divergences and to execute. So it's the same principles. Okay, right. Let's go. Just going to get the So let's go back to the slides. How do you figure out this strategy? Oh, yeah, I've already just read that. Right. Okay. Good stuff. Right. Let's go back to the slides here for a moment. So the key was risk and reward. It was the key. I know it's such a basic principle, but it really is. It's what gives me those outsized return trades. And the irony was, although when I started that 10K to 100K, the first 3 months gains were all from day trading. The bulk of the gains for that entire challenge were from swing trading. The bulk of the gains were from swing trading, not intraday trading, just letting you know. So the intraday got it going. I had a nice lucky spell with the intraday, but most of the big gains that got it up, the account up to 100K, were from swings. Okay, just letting you know, it's from doing all that stuff. Because I think a lot of people, there's a misconception that people think that, well, if you're day trading, then you'll make more money. And it's not, in my experience, the case. I'm not saying that you can't make good money from intraday trading, but for those of you who have full-time jobs, do not worry. Most 99% of day traders lose money. So, there's a very small percentage that do. So over a sustained period. So, what I'm trying to say is don't worry about it. You don't have to. And don't think, the only way to turn a small account into a large one is from intraday trading, because it's not true. I did it, and I've continued to do that sort of thing. I'm in the middle of a challenge right now. I started it at 20K. When I did the last update, it was at 120K. And again, that's all swing trading. So if you're sitting there thinking, I can't day trade, you don't have to, because swing trading, you can get those big risk to reward ratio trades. Okay. Yeah, exactly, Brett. Yeah, exactly. Well, Marco, that's a valid point. Marco said, but surely swing trading will give a lot of swap costs. I guess it could do, depending on the forex pairs or markets you're trading. So it's a good, valid point, and I'm going to answer this. So if you're trading the major currency pairs outside of dollar yen, US dollar, well, it depends on which side you're on. So if, for example, because the Japanese have had negative interest rates, they've just gone positive now. But it's still a differential. The Federal Reserve reduced interest rates last night to 5%, didn't they? But Japan are still sitting at marginally above, I can't remember what it is, 0.2 of 1% or something, 0.25, I think it might be. So the interest rate differential, if you're buying yen and selling dollars, so selling dollar yen, basically, you're going to pay a heavier swap charge than if you're trading euro dollar or pound dollar, for example. Because if you're trading euro USD, well, the interest rate differential is a lot closer. I think, what's the ECB interest rate at the moment? Is it 4.5%? And now in America it's 5%. So the swap charge is a lot lower. So don't worry. And again, it's only if you're long euros, then you're going to be borrowing in euros at 4.5%. But of course, and then you're selling dollars. So the interest rate differential is negative. So you're going to be paying a swap, but it's not that much. I can sit in a euro dollar trade for 3 or 4 months quite comfortably. Yes, there is a swap charge, but it's a cost of doing business. If you owned a shop, the cost of doing business is having staff. So that for every item that you sell in the shop, it's not pure profit, because you've got staff, you've got heating costs, you've got lighting costs, etc. So just see it as a cost of doing business. And so I won't mind seeing my swap charges going up to 30% of total profit. It's still a whopping great big profit. So I don't mind. So, and that would take quite some time. If I'm in a trade and it's having a really good run, that would take quite some time. Like I said, I can sit in a euro dollar trade, paying swaps for easily, 4 months, and it's not really a problem. Okay. But I do acknowledge it does depend on the pair. So, for example, if I sold dollar yen, I might only want to be in that one for maybe 3 weeks because the swaps are bigger and they'll build quicker. So, and if you start trading cross pairs, then again, their swaps may be bigger. So, my advice, stick with the majors. They're most highly liquid pairs, the major currencies. You start going to exotic pairs, you're going to be paying lots of swaps. So there's no need to. Stick with the majors, most liquidity, no nonsense going on, no manipulation, so to speak, in thin markets and all of that. Much, much better. Okay. Yeah, I think another thing that a lot of traders have issues with when they're day traders, I'm going to get to the other traders here, but when they're day traders, they always think, oh God, we've got to hold a position overnight. What if something happens? They get literally programmed into wanting to be flat before they go to bed. It's a control issue. So, I've been trading 27 years. I've traded through the financial crisis, through the bear market of 2000, all of these crises, and I've never been massively affected by, holding positions overnight. So, it's just not, you manage your risk by only having a small amount of risk on per trade. And so, yeah, let them run. And I'm covering this within my community all of the time with my traders. They're watching what I'm doing all the time. They just follow what I'm doing. And, yeah. Right. So let's have a look at some other traders. This is what, these are just a few traders from my community. So Bandit, I'm just giving some made up names here, took a 5K account into 50K, but he did that about a year ago and he did it in 3 months. So now, if you said to me, oh, I've turned 5K into 50K in 3 months, I'd say you must have been taking a heck of a lot of risk on. And so that is true. To turn 5K into 50K, so 1,000% or 900% on that in 3 months, you've got to be risking a lot. So the backstory on this is, and this isn't something I recommend. Bandit is a fairly wealthy individual. So what he did is he just put 5K. He's got loads of money. So he just put 5K into an account just to see if he could say, literally be risking 50% of his account balance on any individual trade. So that's obviously not what you should do, because it took him 3 goes in order to do that. So he did blow 3 5K accounts. He's got, like I said, he's got loads of money and he just wanted to do it just and then he did make 50K on it. So he took very big risks. So probably not the best of examples, but it's just, in theory, you could do that. Okay. These are more realistic now. Doug took an £8,000 account, turned it into £33,000. Someone was talking about adding to accounts earlier on. I'm a big fan of that. And he then added about another 40K to it. So was then trading at 73,000. Again, Doug's got money again. And then he added more money and he was trading with 200,000. So he was carrying on making money on the account, but he did add from savings. Now, I appreciate not everyone's got that kind of money in savings, but nevertheless, he still took that initial capital to prove to himself that he could do it. He'd been trading for 4.5 years at this point. It took him that time to find his way in trading, and then the light bulb went on, and then he took an 8K account into 33, added to it, carried on making money on the 73, and then added another 100K. So we ended up trading about 200K. Oh, what's next? Karim turned 5K into 35K and then went part-time. So he went the other way around. He was doing that full-time and then said, actually, I don't think I need to trade full-time. I'm just going to trade part-time. So that's what he did, and still works that around he's carried on since. That was years ago, and he's still part-time trades to this day, and still can make these exponential returns. So I don't know what he does nowadays because he's built his account up now. But Alan was an interesting one. 10K into 75K, and is now full-time. He trades with over 6 figures now. So, and he trades full-time now. So all of these had one thing in common. The thing that they had in common is they used MTF, multiple time frames. So just like I've gone through today, they identify a trading opportunity off of support or resistance, and then go down the time frames to find patterns to get themselves into trades. All of these people did this trading. I see someone said, is this only on Forex? Mostly, I would say, on Forex. They might be trading within their trades, some stock index trades, but majority of it was all on Forex. Yes. Amanda, I would run for the hills. Amanda said 1 month before, it's your translation, but anyway, you said a trusted trader told me to invest $10,000 and he can give me 1,000 monthly. Is it possible? I need your answer. No, don't do it. Run away. Because if traders are soliciting you to say they're going to make you 10% a month, no, they'll lose you all of that 10,000. It will be either a scam or maybe not even a scam, but they won't do it. They won't succeed. They'll blow up your account. Please don't do it. Okay, let's move on, and then we'll get to the questions. So don't think about the goal, first of all. You've got the goal when you write down the goal at the beginning. Then chuck it in the bin and process and concentrate on the process and the plan. When I did that goal was so high that I didn't know if I was going to be able to achieve it, even though I'd got all that experience. I didn't know. So I had to forget about the goal and put all my energy and concentration into the process of trading. So write your goal out, then chuck it in the drawer, and then that's all you're focused on. You've already done your plan. You know how much you're going to be risking per trade. You know how much on average you would like to be, if you're intraday trading, how much per day, how much per, or swing trading, how much per week, and how work the numbers out of what you need to do. That's all done when you write your plan. Other than that, you just get on with focusing on the process. Okay. And to finish off, there's a couple of things. One, Giuseppe's email. Oh, there you go. If anyone's got any questions about opening an account with Tickmill, I'm going to go back to that actually. Do just email Giuseppe there because there's something else here. What's this? Follow my trades. There's 2 ways you can follow my trades if you're interested. You don't have to. I don't care. So I'm not trying to solicit to you particularly. But let's go back to, and I say particularly, but where we go. So coming back to this page that I've been sharing here this evening. Again, if you're watching this, I'll just share it again. Oops, has that worked? Yeah. There you go. So if you're watching the recording of this, just email Giuseppe for the link to this page. There's a load of information on there. Scroll down. And there's the webinars down here. There's a load of them on there. But if you go back up, it does say about you can, open a Tickmill account to access Charlie's community. If you open up an account, I think you have to do, I think it's a minimum of, I can't remember, 4 lots per month. Okay, you need to do a minimum of 4 lots per month. And then Tickmill will fund you access to my community, which is normally £123 per month. So if you're interested in that, like I said, I'm an authorized money manager here in the UK, so I'm authorized to do this stuff. And then you can watch me as I'm doing trades in my own trading community. So that's one way of doing it. Another way is Tickmill have their own social trading hub, which I've only just joined. And I've just doing my first trade on it right now as we speak. So this is their social trading hub, and I'm on it. So if you want to look for me, just go to the social trading hub as a customer of Tickmill, type in Charlie Burton, do a search, and then you'll find me. You won't see me doing thousands and thousands of percents. This is a trade I'm in right now, actually. I've only took it a week or so ago. 16 days old. Okay, so 2 weeks ago. So you can do it that way as well. That's within their social trading. Tickmill, I've known for a couple of years now, and I've really enjoyed trading with them and doing all this stuff that I also do with them as well. They're a great company. You get $1 million worth of insurance. I think that's really important. So your account is insured up to $1 million per person, you know, if Tickmill ever went bust or whatever. So there's a lot to be said about Tickmill, so do check them out in that regard. Right, let's get away from that now and go through some Q&A then. So, okay, I welcome any questions at this time. There you go. I said I'd do it in an hour, and we're just on an hour, but let's go through some questions here. And I would encourage you, go to that site. There's a load of previous webinars that I've done on there on all sorts of topics. So well worthwhile having a watch. Anyway, and I'll be back, next month. We'll do another one, and the month after that. But there's a back catalogue there as well. What if we already have a Tickmill account? Can we sign up for the community? Edward, yes. Get in touch with Giuseppe. Fire an email to Giuseppe and tell him that you want to do that, and see what he can do. So I don't know how you go about doing all that if you're already a customer, but just get in touch with him. And yes, he said to me, you're more than welcome, Charlie, to hand my email address out. So, okay. Thanks, Blair. Another one for the rewatch, you're saying. Yes, you need to watch the webinars. Yes. Is Tickmill open to Nigeria? I don't know, Mark. There are certain jurisdictions around the world that brokers can't operate in because of things like, regulations and all that. So I'm not sure. Again, Mark, get in touch with Tickmill and do ask. How many trades on average did you take per week during the 10K challenge? Good question, Theorandu. How many instruments, currency pairs, CFDs? He said, okay, so how many trades? I was doing, on average, 2 to 3 trades a day, Theorandu, which meant that some days I might do 5 or 6, and other days I might do 1. So from the intraday perspective, it wasn't huge numbers. No, most of the trading was, the intraday trading was done on the euro dollar, but on the intraday basis, most of it was done on the euro dollar and the pound dollar, just so you know. On the swing trading, then I would, trade any of the major currency pairs, plus the likes of the S&P as well. Okay, that answers your question. Which time frame are you looking for entries? Oh, yes, Dominic. I think I've just covered, maybe I've just sort of covered that. Most of the intraday trading, remember that was only really, I carried on intraday trading through the whole 2-year or so period, but the bulk of the returns ended up coming from the swing trading. But, so the day trading, what did the day trading give me? It acted as a bit of a diversification. When I was having drawdowns in swing trading, the intraday trading would sort of offset it a little bit and act as a bit of diversification. Where was the question again? Which time frames? So on the intraday charts, it was 5-minute charts, 15 and 30. Yeah. How do you manage, Johannes? How do you manage a long-term trade? Stop loss and partials, or adding a trade? Yeah, on a long-term trade, I add. I don't take. I will at some point take partials, but the target's a lot further away, so I'm usually adding into the trade as it's going up. So the one thing with a longer time frame trade, if I bring up the charts again here, where are you? There you are. So if I was looking at a longer term trade, we've got the euro dollar up here right now. It's all very well. So let's just drag this down a little bit. Okay. So let's say I've got a target up here. Let's say 115 on the euro dollar. Okay. If I trail up my stop to every little low that's come in, then I'm almost going to guarantee at some point there's going to be a slightly bigger retracement, and I'm just going to get trailing stopped out. There's nothing wrong with being trailing stopped out, but if you want to go for a bigger target, you have to give your stop loss more room. So that's the trade-off. You have to give a trade more space to run the further away your target. So what I tend to do is have once I'm into a trade, I don't too aggressively move my stops up. They will get to break even at some point, and they will be moved into profit at some point, but you don't want to be too aggressive on them, because if you are, then the next pullback is just going to stop you out. So let's just reset that. On which time? Oh, to cover that, Aaron. Where are we? Do you still use your signature bands? Yes, I do, Aaron. Yeah. I just haven't put them on my charts tonight. They are there. I just tried to keep my charts a bit cleaner tonight, considering you've been playing with them in quant strategies to some great success, which is the most success I've had in quant strategies in my years of experimenting. There you go. That's great to hear. More of... Okay, I'm not saying too much more on that. Can you do swing trading with a small account? 100% you can. Or do you have to day trade and grow your account until you can swing trade? It's a really good question. I'm sorry I didn't cover that off. But yeah, and when you say a small account, I appreciate that with swing trading, you've got wider stops. Yeah. So, but this is why you can swing trade off let's say a daily chart here, but you can still find entries to get you into the trade off of the likes of an hourly chart. So that's one way of doing it. But even if you are going to need for argument's sake, 100 pip stop, yes, the minimum lot size in FX is 0.01 of a lot, but so yes, probably a minimum of $1,000 in a trading account would then be all right. If you said, I've only got $200 in a trading account, yeah, that's going to be tough. I can't say anything, outside of that. That's going to be tougher. But yeah, minimum of $1,000 that you can swing trade. Yeah. Marco, that's good to hear. Marco's saying Tickmill is one of the most reliable brokers there is for retail traders too. Yeah, the thing is with Tickmill is, Tickmill came into being because of the two owners of it are traders. They're professional ex-hedge fund managers themselves. So, yeah, exactly. It's a good broker. So if you haven't got an account with them, of course I'm going to recommend them, but I wouldn't work with them. I've been doing this trading lark for all these years. I wouldn't just work with any broker. And so I work with them because I trust them myself, and they're good people to work with. So so I am going to, blatantly recommend them to you tonight. Yeah. Elias, should you set a weekly percentage target? You could do the same principles as with intraday, but just appreciate that when you're trading on week to week and on swing trading, the returns are a little bit more erratic because you're holding on to trades for longer and all of that. So you're not going to necessarily hit those same milestones. So if anything, I would say maybe have a quarterly, when you're putting your plan together, maybe a quarterly target for swing trading, to give yourself a rough target. But like I said, then chuck it in the drawer and then just focus on the trading. Because what tends to happen is 80% of your gains will end up coming from 20% of your trades anyway. So you'll go along for 6 months, sometimes hardly making any money. And then you're in the space of 2 or 3 months, you'll go and make some really amazing gains. That's the way it goes. So so often is the case in life as well. Tickmill in India, I don't know. Check them out. I'm sure they'll cover India, but do you'll have to get in touch with them. I don't work for Tickmill. I am completely independent, so I don't know every jurisdiction that they deal with, so I can't answer every question on that side. Can you talk more about the psychology of increasing lot size? Yes, Edward. As the account grows, I find this is the big challenge for you as you increase your account size. Yeah, one of the things with increasing account size is gradually the position size becomes bigger. And where I think a lot of traders go wrong is they'll trade at, for argument's sake, one lot, and their account's growing, and then they'll automatically go to 2 lots, for example. That's a big jump in position size, and you've just it's 100% increase in your position size. So all of a sudden, it's all going to be magnified. So my first advice is very small increments. So you go from 1 lot to 1.01, and then 1.02, etc., etc. So make sure there's small increments that is growing, so that it allows your brain, your psychology there, your trader mindset, to gradually become accustomed to bigger size. But whatever way we slice it, your account's going to grow and you're going to end up with bigger position sizes. So a lot of what you can do comes down to visualization. And there's a couple of things to note here. So with visualizing, a lot of people spend time visualizing winning trades. That's the worst thing you can do. What you want to do is visualize losing trades. And I'm not joking here. Visualize losing trades, because by visualizing seeing the number there, whatever the number might be, whether it's $100 or $200 or $500, whatever it is, if you get used to visualizing that number on a losing trade, then it becomes more palatable. And you understand it's the same risk. It's still only, for argument's sake, 1% of your account. It's just that your account's got bigger. So that's one thing that you can do. Here's another trick for you, Edward. If your account's growing or grown, or maybe you've added to it, here's a little trick. Have 2 accounts at half the size. This is what Doug did, right? So Doug did this when that account, when I said earlier on, and he added 40k to his 33. So he was up at about, I know he was up at about 75K. And he said to me, the numbers were, all of a sudden, because I added to it, a lot bigger. So what he did is he split his account with his broker, just had a sub account. So he actually was trading, whatever it was, 32,500 separately in two accounts. He said, psychologically, I'm still trading the total number. But he said, but by logging into the two accounts separately, and I'm seeing a smaller amount of risk per trade. So a nice little trick there. There you go. Right. Oh God. Just so you know, I've just looked at the thing. I've got 31 new messages for me to read through. So, Edward, if you've said anything, it's going to take me a while. Actually, why don't I just go down? Hopefully, maybe he's there. Oh no, there's loads. There's not. Oh no, but I can't get down far enough to see Edward's if he's said anything else. But anyway, there you go. It's a good tip for anyone that way. Marius, if you're trading for 27 years, don't you have already enough money so you wouldn't need to ask money for mentoring and advice for Tingmill? Yeah, that's a really good question. Why do I do it? And I always say this. So, okay, there's a couple of reasons why I do this, and I don't do it for charity, Marius. Yes, Tickmill pay me to do these for you. So why do I do it? Okay. Number one, significance. I'm being brutally honest with you. I get a kick from training people and the fact that I'm pretty experienced in this. I quite enjoy the fact that I've got a lot of knowledge and sharing that. And I'm not doing it for charity, but it's a bit of an ego thing. You've asked a brutally honest question. I'm going to give you a brutally honest answer. So significance is part of that. So I get something from this deal, so to speak, when I'm training traders. I also, remember, Marius, I manage money professionally as well. I think number two, I'm going to write this out in a second. When I first went full-time trading back in 2001 with no other income, and I traded for about 5 years with no other income coming in. So I've been that trader who's traded with no other income, purely trading for a living. One thing that was missing when I gave up my career and became a full-time trader was a sense of purpose. And do not underestimate, because I did, just how important it is to have what you feel to be a role in life. And for me, a role in life, just sitting in front of my screens wasn't enough. I needed something more to do with my life. I needed a sense of purpose. I'm a big believer in work. Too many people don't want to work these days, all around the world. And one of the best things for their mental health is to actually do a good day's work. So for me, I learned the hard way that actually I didn't have a sense of purpose at that time. I lost, from working for a company, interaction, all of that stuff. What I'm doing here tonight, what I do in my trading community, it gives me a sense of purpose. I get interaction. And I satisfy that significance as well. So there you go. Hopefully that answers your question there. Can I see the Q&A? Yusuf, yes, sorry. How to develop patience for trading in this very fast world? You're 30 with 2 years trading and you feel rushed. Don't worry. Right, first things first. 2 years into trading is nothing. So in trading terms, you're still in kindergarten. So it's nothing. Most traders, it's about 4 to 5 years where they start to, reach some level of maturity as a trader. So first things first, take your time. It's about 4 to 5 years with a lot of traders before they really start to accrue a bit more experience. There's no substitute for experience. You can learn strategies and whatnot, but you need, this time is really important. So if you keep that in mind and think, oh, I'm okay here, lots of traders, it takes them 4 to 5 years. Oh, okay. That might help with that. So, yeah, slow down. It's not a race. Trading's going to be with you forever. And, it's not a race. That's all I can say. You've got another question here as well, Yusuf. He's saying, I'm against day trading, but why not do both if a person has time? One thing I have to say, I'm not against day trading. I'm not against it. I've done loads of day trading myself over the years. Where I'm against it is brand new traders who get into trading. They should not go to day trading, because day trading, there's a lot more noise, loads of noise intraday. That, for a newer trader, is a red rag to a bull. It's not going to end well. So that's my first answer. If you have time, then yes, you can both day trade and swing trade. What I tended to find was that they ended up just cancelling each other out. It would be like if I was having a draw, as I said earlier on, a bit of a drawdown on swing trading, all the day trading did was to give me a diversification during that period. It's a weird thing. It's not, you don't tend to make twice as much. It never seems to work out that way. Bearing in mind, if you day trade and swing trade, right? So you might be day trading and short euro dollar, but you're in a long on a swing basis on euro dollar. Mentally, that's really difficult to get your head around, because you've got this vested interest in euro dollar going up, and yet, on the shorter time frames, there might be some setups to short it, but don't underestimate how difficult that's going to be. So you don't have to do both. You can, absolutely. But if you're going to do both, trade them in separate accounts. Do not do it in the same account. Get 2 accounts. Just so you know, folks, I'm going to work my way through these Q&As, but there's 40 new messages on the block here that I can see, so that I haven't read yet. So you're going to have to bear with me. There's still loads of us here tonight. It's a big whopper of a webinar. Is the NASDAQ good to trade for new beginners? It's okay, Raj. NASDAQ, it's the stock indices are beasts, but if you want to trade US, then S&P, NASDAQ, not going to really make much difference. Just keep your risk low and have slightly wider stops would be my advice. That's good to hear. Thank you, Yusuf. You're saying you are one of the biggest reasons that made me stick at it after more than a year. That's really kind. Thank you for that. John, Mr. Harris here. What advice can you offer for swallowing personal PBs on longer swing for weeks or months with entries on 5, 15, 30 or hourly? In particular, psychology for managing and holding through pullbacks. Okay. What advice can you... Right, okay. What advice can you offer? Okay, well, let's come to this chart here of the euro dollar. As we can see, the euro dollar, since it made this low in April, it's had 1 pullback here, 2 here, and 3 here. So one thing we have to do as traders when you're holding on for a while is to sit through pullbacks, and they're not always nice. One thing I would always do is document what is going on a chart. Take screenshots of charts and write all over them. So, for example, if you see that day there, that big red down day, oh God, and if I put it into real time now, that was non-farm payrolls just a week ago. So let's put that on. So it's done a pullback. It's come up, non-farm payrolls on that day, and oh no, we've sold off. Then the following day, oh no, it's coming right down. You're sitting in a position. Oh God. Why am I picking out a news day? Because news events are almost there to try and put you off your trades. Forget intraday trading now. I'm talking about swing trading. There's always news going on which might put you off. Oh no, that was a good non-farm payrolls. I've been long Eurodollar. I better come out. And then, it settles down, and before you know it, it's come all the way back up and taken out the highs of the non-farm payroll day. So write it down. Go back over a chart and look at any pullbacks and say, okay, what was the news at that time? What were any economic releases during that phase there? Like this phase here was when there was all this uncertainty because the French presidential elections, that all kicked off, didn't it? And so at that point, during that phase, everyone thought the euro was going to come down to 102. I say everyone, lots of macro guys and in the news and stuff. Oh, the euro's going to collapse now. It's all this political uncertainty in the Eurozone, blah, 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 in France. And look what's happened. So get a load of charts, go back and do a little bit of scurrying around, use an economic calendar, and go back and see what was going on some of those. Some of these moves will be as a result of economic releases. Some of them will be as a result of news, like I said, about the French presidential elections and all of that. So, and it helps give you confidence to say, oh yeah, every time there's a pullback, there's always going to be bad news, because bad news is what produces the pullback. But the market so often gets some new news and they rotate back to the long side again. So a great exercise would be screenshots and then writing notes on these charts, because you'll soon realize, oh yeah, there's always bad news or something coming out which creates pullbacks. So you get used to it and you're saying, okay, I'm in the middle of a pullback. And I use this language a lot. Until proven otherwise, this is just a pullback. So when the euro is pulling back here, well, until proven otherwise, it's just a pullback. Technically, it's a pullback within this upwards trend. Keep using that sort of language until proven otherwise. It'll help. Make notes, get used to looking at historic charts and making notes about charts in the present as well. And you'll build up a resilience to, oh yeah, every time there's a pullback, of course, there's going to be some bad news. And before you know it, if they're trending, they'll rotate and carry on higher again. There you go. That's that answer for you there, John. Okay, let's move down. I'm hardly getting anywhere, am I? There's now 47 new members. You find potential sales manually or using an automated system? Manually for me, but by all means, you can use scanners. I do have some software that is a scanning tool, but I don't use it. Not for my personal trading. I love the art of trading. One of there was a final slide actually. For me, trading is deeper than just making money. And what I mean by that is that it has to be a mental challenge. It's a bit like what I said in answer to that question earlier on from Maris about why do I do this? Well, as I said, I need to have a purpose and all those things as far as doing things like I'm doing here tonight. But from a trading perspective, I need to get stimulus from it. It's not just about making money. And funny enough, Bill Lipschutz, who was in the second Market Wizards book, New Market Wizards. And I love this quote because this really resonates with me. If a trader is motivated by the money, then it is the wrong reason. A truly successful trader has got to be involved and into the trading. The money is the side issue. The principal motivation is not the trappings of success. It's usually the byproduct. Simply stated, the game is the thing. You've got to love it. You've got to love trading. And that's what I love. I love trading. So, coming back to using scanning software and all that sort of stuff, I love the art of trading. I love analyzing charts and doing it all myself. So if I didn't, I would just use a scanning tool. But then my heart's not in it in the same way, And so for me, anyway, I love that engagement. There you go. That's your answer there. Do you use smart charts? No. The quick button access to do trading? No, don't do any of that. I use my own charts, Bhupinder. Sorry, my own analysis. It's all my own. You've got to bear in mind, I'll let you into a little secret. I only look at the major currency pairs. So it's not a huge amount for me to do. I'm looking at them every single day. I know what they're doing. And I predominantly, 80% of my trades are on the euro dollar. So, yes, I use Tickmill. Yes. I do have other brokers as well, but only because I've been with them for years. So I do have an account at Tickmill as well. Do you just trade now or day trade as well? No, I stopped day trading years ago. So time is an important thing for me, Brett. Day trading requires a lot of time. And as I've got older, I need more time to do other things as well. So swing trading suits me. Plus I get, again, that mental stimulus. I got to a point where for me, day trading was just like vanilla trading. It didn't give me enough mental stimulus. Whereas getting into a swing trade, adding to it, which is tough psychologically, and holding it and holding it and holding it, when as human beings, we're hardwired to be, to have instant gratification, and we've got to do delayed gratification when we're doing all that. But I love taking myself outside of my comfort zone. And so for me, swing trading does all of that. Day trading didn't really do that in the end. Don't get me wrong, I day traded for years, but there was twofold. I didn't get anything mentally from it, and time was important. Oh yeah, good point, Yusuf. Why does Cristiano Ronaldo still do adverts? Yes, coming back to Marius's question. Yeah, why do the Rolling Stones in their whatever they are 80s now still tour when they're worth hundreds of millions of dollars? It's having a purpose. It's having that sense of whatever, And so yeah. Thank you, Mark. That's very kind of you. Is the Nasdaq safe to trade? Yeah. Yeah, it's a big US stock index. It's just they move around a lot, but yeah, it's safe. Where do you watch the recording later on? David, the website. If I go back here, I'm going to pop this link again. Oh, you mean the recording from today? Tonight's recording won't come onto this website, I guess, for I don't know, because it's their marketing department or whatever have to put it together. So I would allow a week, and then it will be then put onto here. I would say about a week, David. Yeah. Am I still pumping iron? Andy, I had a session with my personal trainer at 4:00 this afternoon. Yeah. What's your average stop loss size in pips on a swing trade? Well, Brett, it will vary. It will really vary. Bearing in mind, like I've already said, I trade the euro dollar a lot. So some swing trades, if I'm getting in later on in a move, then I'll quite happily have a 150 pip stop. If I manage to get in off a low, like let's say this turn down here, I might well get in with a 40 or a 50 pip stop. Sometimes it might even be a 30 pip stop if there's been an intraday, like off an hourly chart setup. Then yes, I could end up with a 30 pip stop and then turning that into a swing trade. But yeah, 30 to 50 30 would be the absolute smallest, but 50 still good, because if I got in here with a 50 pip stop and I'm looking to run that a lot higher, up to let's say 115, well, the risk to reward is don't know what that is. It's a lot. We're looking at 1 to 15 to 1 to 20 by the time I add, or possibly even more than that. So yeah. But some of the add-in trades I usually have bigger stops on. But when I'm getting in off of a pullback, then yeah, they can have relatively tight swing trade stops. Yeah. Getting through some of these questions. What about using prop firms, Norman? They seem to be all the range, but I don't think it's a good idea. I'll let you into a little secret, Norman. Certainly here in the UK, I don't think prop firms will be around in 2 years' time. The FCA here hate them because of what it is. It's not real trading. It's not real money. They're demo accounts and all of that, and this whole paying challenge fees and so there you go. I don't think they're going to be around in a couple of years or so's time, or if they are around, they'll be massively regulated and they'll completely change. I'm not a fan. I think people should aim to trade their own money. You'll trade your own money better. You're not at the mercy of a prop firm who might widen spreads on you because they don't want to do a payout. If you were to be in a position where you were getting payouts after a couple of months, and they'll be like, oh no, that person's, and I know this because I've spoken to people that have worked for some of these prop firms. They're like, yeah, we'll widen the spreads out over the weekend to catch some traders, So I am not a fan. Okay. Do you have a swing trade on the euro dollar at the moment? I don't know, Davey. I couldn't possibly say. I think that there's your answer. I might be, yes. Look, the bottom line is I am pretty much never flat in the market all year long. So I'm always in trades. So, and if 80% of my trading is euro dollar, there's your answer. Am I on X? I am, but I don't post a lot on it, Mark. I just post up some of my videos, but not a lot. Check me out on Instagram or my YouTube channel. I put a good few videos on YouTube. How many of the points of the checklist must be met for you to open a trade? If the risk to his reward is really good, Matus, then I would take a 5 out of 10, because if it's got a really good risk to reward ratio profile, even though it's missing a few of the criteria, I might actually take a 5 out of 10. Yeah. I think I've just answered that one for Sean. Sean, I'm not a fan of them. They're there's a lot of rules. They do it on purpose because then, the people will get paid payouts and all of that, but then eventually it all falls over and stuff. I'm just not a fan. So, just have a brokerage account. Do it the right way. If the FCA in the UK are looking to ban them, it says all you need to know. There you go. So, or looking to do something to heavily regulate them and change their entire makeup in the next few years. So, yeah, I wouldn't. And I literally just heard this through the grapevine via a contact in the city literally last week. Do you ever hatch your trades? If yes, do you use different lot when doing it? Sorry, Sam, I don't know what hatch your trades means. You'll have to... Oh, blimey, I've got 58 messages. I'm still trying to work my way down. I don't know what that means. You'll have to explain. New traders, is it advisable to go to prop or invest? Oh, I've already covered that. Oh, Marius. Okay. I don't know if Marius is gone, but because that was 20 minutes ago. I've just got to Marius's answer. What advice would you give? Can you offer swallowing? Oh, I've already covered that one. Same situation, Ruben. Yeah, you were in financial services for 11 years. Trading was your answer. Yeah. But for me, it wasn't enough in the end, because I felt empty, and let's put the slide back on. Yeah, I felt a bit empty, just trading. I needed more. and I needed to have a sense of purpose. So yeah. What do you mean by drawdown? I understand it to be a withdrawal. No. A drawdown is your equity. So you're trading in your account, and your account goes from 10,000 and it gradually grows to 10,500 and 10,000, 11,000. And then you go for a drawdown, a losing period, basically. So then, you go for a losing period. So it goes from 11,000 back down to 10,500. It's a losing period, a series of losing trades or an unprofitable period. That's what a drawdown is. Oh, Dominic on the TikTok. Yeah. Yeah, I don't pick those videos. I just turn up at the studio and they just sit me in front of a screen and say, there you go. Just do a load of, as you said, reviews on these, some of these influencer videos. So yes, it's a bit of fun. Yeah. Where can you follow me? I think I've just covered that, Mark. But yeah, I'm on Instagram or YouTube, Charlie Burton Trading. I think I'm Charlie Burton Trading on Instagram, and I'm definitely Charlie Burton Trading on YouTube. I put loads of content up there. It's good. It's a lot of trading psychology stuff on the YouTube channel and all sorts of subjects. So yeah. How do we know which currency stocks, etc., to trade for best profit? Okay, you need to have a plan. So you need to have a trading strategy. It's not about best profit. It's not. Seriously, it's not. It's about finding markets that are highly liquid, that are just going to move well. So my advice would be to stick to the major currencies. You can look at the major cross pairs as well. That would be more than enough. There you go. Then you just need to have some strategies to trade those with. Will there be a recording? Yes, there will be. It will go onto that website, as I've said, onto my hub in about a week's time, I should think. Why not go with a manager like Morgan Stanley? Sorry, I don't. Bhupinder, I've lost there. I don't know what that was in relation to. You'll have to expand on that. I'm scrolling down. I've got 62 messages now. Could you share your slides and notes? Are you not allowed to? Andrew, I could share the slides. I wouldn't know how to do it. There are no notes, Andrew. I don't do notes. It's just these slides. But so this presentation will be made available on the site, on that web page. It will get uploaded onto it in the next week. If you want to explain to me how I can share the presentation into, I don't know if you can. Just have a look. See, there's buttons down here. Don't know. Okay. Currently, Yovita, you are currently trading a very small account because you're not consistently profitable. Yes, good. Okay, keep it small then. You have the money to trade 100 times the size, but I don't feel very confident. How do I scale up in a healthy way? Well, at the moment, so you're obviously a fear-based trader. Nothing wrong with that. So you've got to deal with the psychological aspects of being a fear-based trader. So, because confidence is an issue. So yeah, just carry on trading at the small size until you build confidence. There's no point in trading with more money until I always say, earn the right to trade with more money. So if you haven't earned the right yet, just carry on. Doesn't matter. Stay with the small account, and over time you will then earn the right to do it and then scale up in a small way. So for argument's sake, if your account was $500 now, and let's say you've been trading really well, and let's, for argument's sake, it ends up at $1,000. I don't know. Don't go and then put $20,000 into the account. I've covered this off earlier on. You need to just put small incremental add-ins in so that psychologically you can get used to it. So small add-ins. Yusuf. Oh, I think I've caught up. Oh, no, I haven't. Somehow it's taken me right to the bottom. I don't know why. Are we still going? I think we are. Okay, yeah. No, just making sure that the recording's still there because it's taken me right way down to the bottom there. Right, so I'm now going to have to start scrolling back up because I've missed a chunk. It's literally just probably because there was, I last looked, it was 68 unread messages, and it's probably just skipped me right to the bottom. So apologies about that. Oh no, that's right. Dear Charlie, I'm currently trading. Oh no, I've covered that. Oh no, maybe that's it. Yeah, Bhupinder, are you still there? You said about something about JP Morgan Stanley. So I don't know there. But okay, I've caught up. Wow. Has everyone gone to sleep now? By the way, okay. Yusuf said people can easily Google the page, Tickmill Charlie Burton Trading. There you go. So you can do that anyway. I'm not seeing any more questions coming through. So it looks like we're there. I've answered all the questions. Yes. So I'll hold fire just in case anyone's got a last question, but I think we've done a reasonable amount now. We've been going for about 2 hours, just under 2 hours now. So I was going to take myself off for a run this evening, but it's dark now. So maybe I won't. Anyway, look, stay on Tickmill's list. I'll do another webinar next month, in October. Keep your eye on that web page because this webinar will be loaded onto it. Do check out the other webinars on there. Contact Giuseppe if you need to. And trade safely, watch your risk. I'm preaching to the converted, I'm sure. But hopefully I'll see you again soon. Take care for now.